everyone. Welcome back, and thank you because I couldn't make it to the class last night. So, as promised, I'm going to make the video for the class we missed. And I believe I gave us an assignment 2 times in a row now. Yes, and I'm also expecting the submission of the previous assignment. Yeah, because I didn't forget, and that's the first thing I'll be liking to um, approach us with. So please and please, as much as you're watching this video and you were a student, an active student in GTA Trading Academy, you are expected to submit your assignment and yeah. So because this is gonna help you. This is gonna help your growth. It's gonna help everything that has to do with your trading performance. And then with that, you can easily improve yourself. It's a free thing. It's a free will if you want to submit or not. But then please, I'm urging you. That will really inspire me more to let us know that okay, fine, we actually following up and we are actually getting to understand this that we are doing right here. All right, where we stopped yesterday was breakout and breakout and retest strategy in the markets for understanding entry of buy and sell. But as for today, we are going to be working on fake out and multi-time frame analysis, institutional price, and some certain candles. But maybe I'm just going to narrow it down. If we can really meet up with this, maybe I'm just going to narrow it down, and then we can simplify it. All right. So for fake out, as we all understand, a brief summary from the last class is that, let's say we have a situation that allows us to have a kind of a breakout. So for example, our support and resistance is there. We did that already, and then we broke out, and the market keep going up. Right. This is a proper breakout strategy. This is like breakout and retest. So this is a breakout and a retest, right? So let's have a different chart, and then it's gonna be for the fake out. This can also be on a uptrend. It can be on a downtrend. It can be on a ranging market. I'm talking about the fake out as well. It can be on any form of trend, depending on the market scenario. So we are expecting a breakout from here, right? So in a situation like this, it actually broke above and then it came back inside of the chart, or maybe even broke below. So this right here is a breakout. This right here, sorry, is a fake out. This right here is a fake out strategy in the market. And then you might even be asking, like, what's the purpose of this particular fake out? Is most of the time used in catching liquidity in the market. So let's say, for example, we have let me try to bring out a scenario before we actually check the charts. And today I'm using USDJPY. I just open any form of asset randomly. It doesn't matter what asset it is. It's always going to be in every asset. It's like a very common thing that you can find in any asset, no matter what asset it is, no matter what. So you can find any asset, and I just choose to use USDJPY here, just to give us that example. All right, let's say we have a bullish market, and then we are like selling to the downside. Then all of a sudden we drop big, and then going back to the upside, and then we just tap here, and then we came back to the downside. So let me explain this scenario. This is a break below, right? We had a break below right here. Let me label it. So we have a break to the downside. Okay, and then we have a support and resistance over here as well, labeling it. And then we have a resistance over here. So in this kind of scenario that you can see over here, we can see vividly that, can you see that? It came back here because this actually is a super zone. All right, you can call it a super zone. You can call it, what's it called? Support change to a resistance. This is a resistance and this is support. I made mention of a confluence yesterday. During yesterday's class, I made mention of confluence. That is when we have two or more and we have two or more support or resistance that meets at a particular price. So now this is actually filling up a liquidity. So it's mainly for liquidity purpose. And you shouldn't mistake that to don't mistake that to a breakout strategy. No, it's mostly for liquidity purpose, just to grab a liquidity and sell back. And then in a major case scenario, we usually have this kind of liquidity being filled because of an imbalance. And I hope you understand imbalance. Maybe we're even going to divert the topic today. I don't know. Maybe I'm just going to focus on something, but this particular topic. But we have imbalance. To understand fake out, then there must be an imbalance. All right, there must be an imbalance to understand fake out. So I mean, it's because I'm recording it alone. It could have been more better if you hadn't been in class, and then I can just ask for you guys suggestion on which particular topic could have work on. But then I'm just going to flow with whatever comes to my mind. Okay. So this is most probably imbalance, and or FVG. Most of the time it's gonna be like one of these two. So then that's it. Okay, so let's hit the market. Let's see what do we have here. Okay, so I think here is a good example of what I just explained earlier. We have a support over here, right? So we have a support over here, and then we also have a support over here. All right. And then the support that we have here, we have something called the head and shoulder. This is like a chart pattern of head and shoulder over here, which is pretty cool and sleek and good. I mean, it's a very good analysis if you are actually a very, very good trader and you experience and you understand what is going on in the market, you can see this is a good example for you to have a very big sell. So we have the left shoulder, the head, and the right shoulder. Okay, so I'm not going there. I'm just trying to show you. All right. Then we have our support. Sorry, we have our resistance over here. Do you know, you might have mistaken this to be a break above or like a breakout strategy. You might have mistaken this and then trying to put your how do I call it? Your buy entry over here. You might have mistaken this and just put your buy entry over here, which is going to be like a total mistake for you. I mean, no matter how you want to do it, no matter what you want to say, it's going to be like a loss because it's going to come back to your entry and then it's hit the SL. And what actually happen here was that we came here to fill up an imbalance. I mean, there's different ways to fill up an imbalance. Either you check the prices, maybe institutional prices, or you use your Fibonacci retracement, like your Fib retracement tool, for calculating the price and knowing when it is for you to actually enter the trade. So this is a perfect example of a fake out in the market. So let's check here as well again. I mean, it's like back to back over here. So I mean, it's impressive, quite impressive. We have this support and resistance again that we can see here. All right. So in a scenario where we have someone trying to make a buy from here because, it broke above, it's very, very good when you want to trade a breakout strategy and let it close above. And sometimes it will even close above and still kind of come back. But what's going to save you is that always try to check where is imbalance. Is there imbalance on the other side? Is there anything the price has to fill on a bigger time frame? So when you understand that, it's going to save you from a lot of entering fake out or trying to enter a trade that's not going to favor you. All right, so we have this here as well. Can you see? The price only came here, to fill up this other block. That's all. To fill up this, because here on a bigger time frame, just going to be like maybe FEG, depending, and then price only came here to fill it up. So you mistaking this for a buy above the resistance or a break above the resistance is going to be a total loss. So that's about fake outs. I'm trying to find another example of fake outs. Okay, we also have one over here. This is just pure that block, or I'll just call it a super zone. A super zone is when we have the resistance chain to a support or a support chain to a resistance. So that's a simple super zone that we have over here. So here we have the resistance. We have we have the support, right? Sorry, we have the support over here. Okay. And then previously we can see that we had a support being broken, right? So we have the support being broken to the downside. I mean, after we have even the head and shoulder again here, left shoulder, head, and then the right shoulder, and then we broke to the downside. Then here we have the resistance created, support created, resistance confirmed, support confirmed, and then, you know, as a layman, you're trying to trade, you're trying to get some analysis for you to understand how or when to enter a trade. Then you say this. So the first thing that's going to come to your mind is that, oh, we are going to have a buy. I mean, you've already understood breakouts and retest, whatever, blah, blah, blah. So what is going to be in your mind is that it's going to be like a buy to the upside. Then you're going to be like, feel like, okay, it's time for you to actually have a buy and, you know, go into the market. But then you see that the market just completed its price, even close above, though there was no candle after the breaker candle, you know. Don't forget what we did yesterday, that this is actually a breaker candle. So this is actually a breaker candle. If at the bin you're actually trading like a breakout strategy, right? So, but then even here it shows that say we are going to have a double bottom, you know. It shows something of that nature, that say we are going to have a double bottom, but then it happened all the way to make it be a fake out, all because we wanted to fill up a liquidity, like just like a liquidity grab, liquidity sweep. It usually happen most of the time when it comes there. But then we can't go to liquidity today because it's not part of our curriculum today. So I'm just gonna flow with multi-time frame analysis. So with just normal breakout and retest, breakout and retest, and fake out. So we're going to make analysis based on that alone. I mean, for our level of understanding, so we're going to work on that just alone, and then we are going to see how much we've learned and how well we've learned and how well can we do what is going on in the market. So yeah, let's go. So I'm going to start with my daily time frame. So what is multi-time frame analysis? When you say multi-time frame analysis is like when you are doing analysis on every single time frame. Give me a minute, guys. Okay, so when you are doing analysis on every single time frame, but then I think the first class I introduced us to this whole thing, which is actually, I mean, commonly known to everyone. I mean, you can read that online. But then there are some time frame that are actually fine. I mean, I'm not going to be the one to make a rule on which time frame do you want to use, but I mean, there are some that are actually nice that you can use. I mean, they are very, very nice. So you can use the daily time frame, the 4 hours time frame, the 1 hour time frame, the 30 minutes time frame, and 15 minutes time frame. And because each of them actually has their own purpose. For me, daily time frame is for, you know, understanding the structure of the market. I mean, trying to know what's the structure. Is it going up? Is it going down? 4 hours to me, I use that for understanding the bulk support and resistance. 1 hour maybe order block imbalance. 30 minutes maybe some FEGs, some prices change, some candlestick patterns, and 15 minutes is for entry for me. So that is how I do my own trading. And then again, I'm going to just do this analysis based on breakout and retest, support and resistance, because we've done that before. So, and we've gone past it, so it's supposed to be easier for us to understand. All right, so let's continue. Let's start. Looking at this chart, the first thing I want to recognize is what is my support over here, and then the next thing I'm recognizing is my resistance, as we can see. So resistance, and then I have my support. All right, so I have my resistance, I have my support over here. And then we did what? We actually broke below this. We broke below this particular one. And then here I'm going to say is the breaker candle. Is the breaker candle. All right. And then we have the sell-off. Then we have a retest. So we have this retest in the market, and the retest is supposed to work for what? For understanding that we are going to have more sell. I mean, we've already done that, and we should really keep that in mind. And then again, let's say I was even here, maybe in the past, that was January 15. So we have this what over here? We have this mini support. We have this mini support. All right. And then there was what? There was a break below of the support, and then we come all the way here, and then let's also make analysis of this one. Yes, this is actually another support. So I mean, it's like support inside support, resistance inside resistance. You can have as much as possible. There's another one here which is a resistance. Can we see? It's pretty obvious. And then we have a break above. So as you can see now, we also have this over here. There's a break below a support on this daily time frame that we can see here. And this is just how we do analysis. It's just a thing that once you understand what you're seeing, all you have to do is like, how can you actually translate what you are seeing on your screen to what is going on in your chart. I mean, that is a very good way to approach it. I mean, it's a good way to see it, and then it's gonna help you. It's gonna help you a lot to understand how the market works and how the market moves. So here now, understanding the fact that there is going to be a sell-off from here. Maybe not. With your understanding, you can easily suggest that, oh, there's going to be like a buy, and then we're going to sell to the downside, all the way from here. So now, what else? Let's go to 4 hours time frame from here. Let's go to our 4 hours time frame. Yes. Here I can easily see what? A resistance. I can easily see a resistance over here. And then, don't forget the principle of super zone. Super zone. I don't know, maybe that's gonna be for another day. But please, once you're watching this video, you can come to my DM on WhatsApp, or you can also make a reply here. Make sure that you give me, let me understand your question. Let me know your question regarding this video. Maybe you have a question or something is not actually being clear. So let me understand, then I'll be able to explain more to you, since I'm just the only one recording, and then we are not in class. All right, so we have this resistance over here, this support over here. But then the power of super zone is actually very good in the market when it comes to what we are doing. So when we understand the power of super zone, it will save you a lot from many things. So let's say we have a support over here, and then over here is coming to be what? A resistance. And then once you understand the power of that super zone, now it's going to help you, like I said. So now here we can see this resistance, right? And then we can see that we're actually having a fake out. I think I actually talked about this earlier. We can actually see this fake out over here, which is going to help in your analysis. Which is going to help in your analysis, all right? And then we can see what more? We can see this over here as well. We can see this resistance, the support, and then everything. So in a way, understanding a simple resistance and support is going to give you that understanding of breakouts and breakout and retest. Can we see breakout to the upside, breakout, break below, breakout, break below? Oh, and I mean, let me just give this simple rule. For the normal layman, once you understand trading more, there's more to it, okay? Simple rule to live by, or to trade by, I don't know. So we have buy when the market break above, sell when the market break below. Let me increase this font. Break below the support, buy buy from support. Well, there are confirmations that we actually used to look for from support to buy. So sell at resistance. That means when you're in a resistance like this one, it's meant to be a sell. But can you see there's other scenarios? So there are other things that comes in the market that warrant us from that warrant more buy, more sell. There's a lot of things that is involved in this. So then we are going to have we are going to have more push what's it called? We are going to have more of this thing, reasons for you to have a different buy and a different sell. So now, when it comes to other thing in the market, when you are in a super zone, you can have this. Maybe you sell from that resistance, you buy from that resistance, depending on the analysis that you are seeing on the market screen. So in this kind of scenario, let me show you this one. So trading in this kind of a range, I haven't mentioned range since morning, so you cannot be trading this kind of ranging market or anything, or trying to even analyze something like this when you actually have a bigger support and resistance, because that must not be overlooked. When you have a bigger support and resistance, it should be a thing for you to consider even when you're actually trading on a lower time frame. And then again, what else do I want to say regarding this fake out? I think I've said enough for the fake out. So we are going to use another chart just to tell you fake out is a thing. I mean, for this kind of analysis, we can have maybe a sell here. All right. And then, because maybe a breakout and retest. It's still a continuation market. I don't trade with JPY, but based on technical analysis, we can see this here. So let's use another asset, NZDJPY. So I'm trying to use the derivative asset from what I trade, not to be like maybe I'm trying to copy and paste something I see every day. I mean, I've been seeing gold and GJ for 5 years now straight, ever since I started trading. So I'm gonna be using some of these ones to make analysis for us to make it easier. All right, let's talk about institutional price. So institutional price. What are institutional? I think someone asked me on WhatsApp what are institutional price based on one of the videos that we made. Well, I hope I've already explained fake out and multi-time frame analysis. So let's go to institutional price, because I'm not going to go in depth because we've not learned that block and some other things as well. So I'm just going to come here to explain to what institutional price. So institutional price is I can use kind of assets with the price. Okay. Euro card. Okay, let's check Euro card. We should actually have something cool going on there. So okay, with Euro card, I can't remember when last I opened this kind of trade. I don't know when I was doing this analysis. Maybe for class purpose, anyways. All right. So for Euro card, institutional price, it's not really fine on it, but I'll just explain the concept of it. So let me just give us a simple arithmetic. Yeah. So 1.000 is different from 1.054 or something like that. It's different from 1.2 is different from 1.23456. It's different from 1.5 is different from 1.5 is different from 1.546. So in the market, it's like you're trying to sum up, like a summary, like a big summary of the prices you are needing to enter in the market. And then how do you go about this? Come to your daily time frame for your multi-time frame analysis, which I just explained now. All right, and let's say I'm trying to draw a straight line support. Let's say I want to get a support from here, but then I can determine maybe it is this or below this wick, right? This is a wick. So I'm trying to understand which one. I mean, if I should double click and come to coordinate, it says 1.47229. So let me draw a different line now. I'm try to balance this up to just 1.47. So 1.47 makes more sense and it sounds better. We are not in the English class to say it sounds better, but in a price-wise look, it's more of a place where you can actually expect any buyer to come to have a good buy in the market. And just like, for example, let's say in the bank now, there's a businessman that wants to actually buy some good stock. You wouldn't just go there and go and buy Euro card at price 1.44848484 something. You rather buy at 1.5, 2.0, 2.5, 2.9, 2.8, 2.3, not 2.3444, not 2.869. You know, I mean, there are prices that are very significant in the market that is very, very okay and very, very nice for buyers to come in, and they want to actually have a good buy in the market. So let me try to determine the resistance over here. Instead of 1.51111, let me try 1.51 and see. Yes, I mean, this makes more sense to determine my resistance instead of just a random price out there. Another way you can go about this is this. Okay, another way you can go about this is when you change your market to a line chart. When you change to a line chart, you can determine the actual price of any candlestick pattern. Can you see? You can determine this with what you're seeing right here. Okay, but then it doesn't mean like when you come back to your this thing, there's not going to be wicks. But then it's another way if you don't want to use institutional price. This is another way to understand your main price, because the purpose of institutional price is we understanding the main price in the market and where exactly are we supposed to buy, where exactly are we supposed to sell. So that is the main thing right here. And then again, I'm gonna show us this. Can we see this? This is something nice as well. This is another good way for you to understand the sketch of your support and resistance. So let's go to 30 minutes time frame, because I used to suggest this. Start it again. All right, okay, we are here. Good. All right, so it's very easy for someone who's just starting trading to use line chart to understand their support and resistance in the market. I mean, truth be told, because it's not going to be hard for you to see things you're supposed to see. So, I mean, here we can easily see the support. All right, you can easily see the support, and then I can also see the resistance over here as well. Yes. So I mean, we can also determine this is like a breakout. It came back to the support, and then we actually have a real breakout, and this is a breakout and a retest without even us seeing what is here. We can see this is a breakout and retest, and let's try to see it in a candlestick form. Yeah, boom, here we are. So boom, and you can adjust a little bit for you to see what is going on in the market. So this is a breakout and a retest. We have the breakout and retest. Yeah, so let's go back to line charts, and then yeah, we have this support to be what, 1.498. It's cool. It's good than 1.49708. Blah 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 blah. I mean, that's too much of a talk. I mean, not too much talk to the column. Okay, here I can easily see my. I mean, this is a super zone, pretty cool. Support, 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 and then we have resistance, resistance, and resistance. So this is a super zone that you can see, right here. Very cool, as you can see that. And then we can have the support over here, and then again we can have support, we can have the resistance as well. So I mean, there's a lot of things in the market that we can actually see right here, which is pretty nice. So I mean, that is all for today. Thank you for watching, and any question is welcome. Just to know, I mean, prepare ourselves for tonight's class. I mean, since we missed that was why I was actually recording this alone. It would have been better if you guys are here and then we can actually ask questions. But for this purpose, I'm just going to call it a day, because we've already done the three topics on our schedule or on our curriculum, which is fake out, institutional price, and the multi-time frame analysis. So I've been able to do that. Thank you so much for joining or for watching. Yeah, nobody's joining. All right, guys, have a wonderful time. Thank you.